Hello everyone, my name is Carmina and I hope you're all doing great today. So welcome back to this week's episode of Bookkeeping Essentials. So before we start, let me ask you a question. So do you want to keep track of all the money moving in and out of your business, but you find it challenging to do so? If yes, then let me introduce to you Chart of Accounts to help you gain more insight into your company's cash flow as well as its overall financial health. First of all, what is Chart of Accounts? A Chart of Accounts, or COA, is an index of all the financial accounts in the general ledger of a company. So companies use Chart of Accounts to organize their finances and give interested parties such as investors and shareholders a clearer insight into their financial health. By separating expenditures, revenue, assets, and liabilities, company can ensure that their financial statements are in compliance with reporting standards. So the list of each account a company owns is typically shown in an order that the accounts appear in its financial statements. This implies that balance sheet accounts, assets, liabilities, and shareholders' equity are listed first, then will be followed by accounts in the income statement, which are the revenues and expenses. So COAs might include these sub-accounts under the assets accounts. First, cash, then savings account, petty cash balance, accounts receivable, undeposited funds, inventory assets, prepaid insurance, vehicles, and buildings. So another one, liabilities account may have sub-accounts such as the company credit card, accrued liabilities, accounts payable, payroll liabilities, and notes payable. Then the third one, which is the shareholders' equity, that can be broken down into the following accounts such as common stock, preferred stock, retained earnings. To make it simpler to locate specific accounts, each chart of accounts usually contains a name, brief description, and an identification code. Each chart in the list is assigned with a multi-digit number. All asset accounts generally start with number 1. So, how to improve your chart of accounts? It is important to remember that when you're producing a chart of accounts, consistency is a key. It is advisable to make your chart of accounts constant for several years to give you easier access in comparing results. Otherwise, if you keep adding new accounts, then it will become gradually more difficult to compare financial information over the years. Lastly, it is essential to regularly review your chart of accounts and keep them at a manageable size to make sure there is no unnecessary data retained in any account. So, that's all for today's video. I hope you learned a lot about the brief introduction to chart of accounts. Once again, I am Carmina and thank you for watching and see you in the next episode. And don't forget, stay safe and have a pleasant day ahead, everyone. Bye!